Hello traders and welcome to another video review. Today is Thursday, the 25th of February 2021. Let's take a look at the Forex calendar. On Thursday, as you can see, there is some interesting data to be published. Some of them, of course, have been published during the Tokyo session, like the NSZ business confidence from New Zealand that was actually way below the forecast of 11.8, it was 7.0, and of course the private capital expenditure from Australia. As you can see, for the fourth quarter, the actual reading was 3%, which was way better than the forecast of 1.1%. During the London session, we got some sort of data from mainly European Union. We have GfK consumer climate from Germany scheduled for release at 8 o'clock. We have a budget balance and the private sector credit and money supply from the Eurozone and France. And of course we got some bonds action from Spain and Italy. At 11 o'clock there is a consumer confidence data released for scheduled for the release from the Eurozone, and we got some speech at quarter to noon from executive board member Philip Lane. That's everything for the London session. During the New York session, we have many more data scheduled for release. 2:30, GDP and durable good orders and the unemployment claims together with continuing claims are scheduled for a release from, of course, the United States. As you can see, the GDP for the fourth quarter is expected to be a little bit better than last time, 4.1% versus 4%. Durable good orders are as well forecasted to be better than the last month, and the unemployment claims are forecasted to decline from 861,000 to 828,000. We got some speeches, of course. We got speeches from FOMC members like Raphael Bostic, and then we got speeches from Randall Quarles and John Williams again. So plenty of speeches, plenty of data to be released during the New York session. So it's really worth to keep an eye on the American dollar. So let's first take a look at the American dollar to the Swiss franc. As you can see, we got this ABC pattern here that had been completed at the level of 9,042 pips. So let me just copy one of these lines so I can put it on the chart. There you go. This was our technical resistance. As you can see, we got a pullback, and then of course we got uptrend continuation. This is our trend line. The trend line has been violated again. So this move down is, let's say, it is a connector in our count, and then we are going to move our another wave to the upside. And if that would be a double zigzag, which means that would be the W, this is the connector of X, and this is ABC wave of the wave Z, right? So basically we are expecting another 3 waves to the upside. It's quite possible that this correction will complete somewhere around the level of 9,162, 9,203, somewhere into that space, and that would be, of course, the that would be zigzag correction right to the upside, or some sort of the complex correction on the Swiss franc. So if we zoom out, okay, we can see that there is still a downtrend on this market, and basically going towards 9,162 or 9,203 doesn't really help much in this situation. It's just some sort of the bigger correction during the down move. However, we will keep it on our chart anyway. USD to Japanese yen, as you can see, we got this wave B to the upside just as expected. Possibly this wave had been completed at the level of 103.13, and that means the market is ready for wave 3 to the downside. So right now we should expect the market to come a little bit lower possibly towards the level of 104.41. Our Fibonacci levels are right now no longer needed, right? And our high is right here, so this is the top for the wave 5, and this is the technical resistance 106.23. So if we of course assume that that this is the top of the wave B, then we can say that wave C is going lower towards the lows of the wave 4, and that would be ABC, simple correction in the Japanese yen, and that might even be the wave 2. So what we are looking for is the completion of termination, apparently, of the wave 2, of the correction of the wave 2. But please remember, this is ABC, simple correction. It might get a little bit more complex than this, but so far is looking good. We should break below 105.76. Then we got another support 105.12, and of course the lows of the wave A, which are at the level of 104.93, should be violated, and then the next target is the lows of the wave 4, 104.41. So that's the Japanese yen, and one last pair is American dollar to the Canadian dollar, and as you can see, this is simply downtrend continuation down towards the very extremely oversold conditions. So our trend line is now being adjusted, and those lines, of course, are right now the lines of the technical resistance. So the color is red, 1.2591, 1.2630. Those two levels are now technical resistances. And let me just zoom out, and as you can see, if we zoom out, then you can easily say that the lows of 2018 had been violated. This low was around the level of 1.2499, so 1.25, and is right now market trading below this level? Yes, it's trading below this level. So the next target is, I think this will be that much. So that's 1.2252. This is the next target. This is the next technical support for US dollar to the Canadian dollar. This is the key, the valid, some sort of a very important technical support for Canadian dollar. So that's 1.2244. So far, there is no indication of this downtrend termination or completion. It doesn't matter how you want to call it. It's still going down, and this recent candle, this red candle now, is very suspicious, because it shows you the strength of the bears that are trying to pressure the market towards 1.2244. So there is plenty of room to go down on the US dollar to the Canadian dollar. Let's take a look at the US dollar index. Let's take a look at the US dollar index to see what is going on there. So we got this 3 candles here, as you can see. These candles were, of course, so these 3 waves here. These waves had been completed. We went down and then bounced towards 61% at 91. The high was 91.3, so 3 pips miss, so that's almost nothing. We got another bearish engulfing here, and there are 3 red candles here, 1 green candle into the technical support, which is the low of the wave B, 89.98. Attempt to rally, failure, and now we are going lower. So this is no longer needed, and of course we have this technical resistance here at the top of the green candle. So that's our zone of the technical resistance. So this is a supply zone, 90.92, 91.03, and we are going even lower. We are going lower towards the beginning of the wave A, which is 89.18. It looks like this is the current pattern. Please remember that this is not head and shoulders pattern, because it is in a wrong place. It's only continuation of the down move on the US dollar index. So apparently what we should see all of the pairs with the US dollar index are being sold, and the pairs like euro dollar or pound to dollar should be bought across the board, and of course that would mean the US dollar will go lower in the near future. So this is how it looks for the first day. I hope you like it, guys. Just a quick snapshot of various pairs related to the American dollar. So I think that should be enough for today. And there's a bunch of data from US as well to scheduled for release later during the day. So I hope you guys like it, and I hope I will see you tomorrow with another technical analysis. So take care and bye bye.